The theme today for today is getting after it, or more specifically, not getting after it. Um, this is a result of just going over my trades from last year. I could basically break last year down into the first part was um, lost some money because of those semis positions, and a lot of that was due to sort of gambling with house money too much, which I'm going to make a separate video on. Apart from that, it didn't do too much. The middle part of the year, this is sort of I experimented with doing a trade a day, then I experimented with, which actually worked okay, then experimented with getting up for the open, which didn't really work for me. Admittedly, the market was very tough, but I was looking at moving to America, which didn't eventuate. And look, regardless, I can't get up in the middle of the night, and I'm not sure that sort of style of trading for me, just to trade in the open and not get any sleep. So, and this third part of the year, last part of the year, I just really slowed things right down. Just traded options only, and I just really try to focus on the true, either the true momentum type stocks or the stocks that are sort of so cheap and what I call the bankruptcy type ones. So by doing that, it's actually proven to be quite good. Now, admittedly, very small amounts of money, so the actual amount of cash I made was very small, but yeah, very happy with that. So, but it does mean that when the going is good for one of those few stocks on my shortlist, and I'm trying to keep a shortlist of 15 or less stocks, I've really got to learn to get after it. So this is Geo Group. Now I've made actually really quite good money on this. Looks like breaking out again after it's a big push consolidation, doing exactly what you would like a stock to do. So I digress. I recall selling the shorter dated options as either this date or this date. Being quite happy with myself, and I don't regret making that decision because I wasn't to know it was going to turn around and get going like it did. That was to sort of de-risk, help find my longer term position, which it absolutely did its job. Now, on review, this is just one of the examples I want to give about just not getting after it enough, and we're going to try and really focus on this year. Is a few days later, it turned around and sold down pretty hard and back down to the 50-day moving average. Nothing wrong with that. And that's that sort of vomit type trade there. A lot of people have been buying this breakout, got stop lossed out here, but actually bid up pretty well. Now, I think arguably I could have been going back into the options then. Now, I think I sold this for $1.50. A few days later, I could have bought them for about 90 something cents. So, I could have repurchased those for quite a bit cheaper. Even if I didn't buy that day, it was this day here that day here, big volume, that news came out that Mike Barry had bought even more shares. So, and I sort of just sat by as a spectator, and I do tend to spectate a bit sometimes. And I'm not quite sure why. Again, I'm just not getting after it, not getting aggressive enough. So there was definitely a case for buying back those options here. I say big volume, good catalyst. Maybe I was sort of too happy to sit on my laurels from here. Anyway, there was an opportunity to buy again there. I sort of half thought about it at the time, and I just sort of sat back sort of too idly. The next example is here. How many ways I've managed to stuff up not making money on this trade is unbelievable. I don't think I've ever bought it. Now this is on my short list, true market leader type stock, knows how to move. We know that. I've identified that before. Massive sales growth figures, monster earnings figures. This is a true market leader. I understand it's more focused on silicon carbide in the semis, so that particular part of the semis look pretty strong. Anyway, I've talked about it previously where I didn't do anything about it here, and again here. So I don't know how I missed this, to tell you the truth. So every trader and his dog was in the trade here, so not surprising to see it got totally slammed, especially when the magical 50-day line got broken, and everyone said it was done, which honestly is just such horseshit. So just look here. So just because it goes below the 50 doesn't mean that the trade is dead, not by a long shot. In fact, I did some work on what I call the 50-day follow through. So if the stock is under the 50-day and the stock is otherwise rising, say the 50 is rising, often the fourth day you see the stock start to move on increased volume. That's normally not a bad time to be getting into it. So anyway, and again, that's the sort of trying to buy that bottom area here. So I had a big sell-off here, and then earnings came out and just smashed like another huge set of figures, not quite as big as the other ones, admittedly. So Bible gap up day on news, I should have been buying it. That's just not forgivable. It's just, yeah, for something like a true market lead like this moves away. Now I could have made 2 or 3x on options already in the space of a few days. Had I been more on my game, like I say, just getting after it. Last example I'm going to give is CROX. Made good money on this one previously. Didn't really have it on my. I didn't have it on my shortlist. What am I saying? There's some guys called Dumb Mothers at Chris Camillo. They've made a lot of money out of options over the years. I follow their videos. They like this stock. It came out, again, this is in the context of a really bad market. 50-day moving average was rising. Strong relative strength. Came out with great earnings here. Yeah, plus 57% in sales. Now, again, there was an initial momentum burst here. Completely missed that. And even still, it gave another consolidation buy opportunities that here came back to the 20-day moving average and sort of settled down just nicely. Now, this is all Harry Hindsight stuff, but you know, look, from 94 bucks to 127, the options, yeah, would have been just gigantic, and I didn't have it on my list. So I think the few things are, look, I am doing my homework, but I need to do it more, and really just get up, even the market's shit, just get up, run your scans, look for ideas, keep things on the short list, because even in bad markets, stocks are, you know, some stocks will move, as I've just shown in these 3 examples, and yeah, stuff that's on my short list, just don't be afraid to get in there and just try a bit harder. I think part of the problem is sort of let the overall market guide me maybe a little bit too much. I just saw a post by Mark Benabini saying the more he does it, the less he looks at the indexes and more on the sort of individual stocks. And I think on reflecting on his comment and just going on those few examples I gave there, I think he's probably right. All guns blazing if the market is a stage 4 type thing. I'm not saying that, but it doesn't mean that you should not be looking for trades, because, you know, as I've demonstrated, they're clearly there. Anyway, my big focus for 23 is to really get more after it.